Today, we're going to zoom into Canada. So, shopping center investors in North America love grocery anchored centers. Has that investor appetite changed? And is it the same in Canada as it is in the rest of North America, for example, here in the US? And what has the impact of tariffs been on the Canadian consumer and the shopping center investment market? To find out, I am going to an expert. We're talking with Matt Smith. He leads retail investment in Canada for JLL. You're listening to Where We Buy. It's the show where we talk with retail experts and we visit the places where we buy. My name is James Cook. I research retail and real estate for JLL. Today, we've got Matt Smith. Welcome, Matt.
Thanks, James. Great to be with you.
So, Matt, you lead retail investment in Canada. I looked up, the number I could find is that you have 29 years of experience in Canadian capital markets. Is that number accurate?
That is perfect. Just under 30. Don't touch me up for 30 yet.
So you lead retail investment Canada. Does that mean you're involved in basically like all of the markets, all the investment markets in Canada?
Absolutely. So we've got a great team across the whole country. The team is run out of Toronto by myself. And so I do oversee, basically every larger asset sale in the country.
And what is the typical? Is there a typical size of asset sale going on right now in Canada for retail?
I would say that the sweet spot, you could call it, is in that sort of $40-50 million range, which is probably the price point for your traditional grocery anchored center. But broad range all the way up to larger enclosed in the multiple $100 million, but generally that $40-50 million is the prime range.
Grocery anchored centers, that's the hot ticket right now.
Absolutely. Number one, and as you said, number one south of the border, number one north of the border. I think COVID taught us that essential needs is where people are going to flock, and so that is absolutely both in terms of the health of the market and the health of the centers. Those are the healthiest retail assets, and therefore where both investors and debt wants to flow is into retail centers, into grocery anchored.
You mentioned COVID. How have the retailers, and I guess how have the Canadian consumer come back? And now we're talking a few years after COVID. Is it a similar progression as we're seeing in the U.S.?
Absolutely. I think, we were left for dead on the doorstep in 2020. And there was a lot more regulation, a lot more shutdowns in Canada than there were in the US. So I'd say retail is probably more impacted here in many ways. Across the country, restaurants being shut down and severe restrictions on the ability to shop. So we saw everything being delivered to the front door for a good chunk of time there. And quite frankly, people thought that was going to be the new normal coming out of COVID, and it's turned out it's not at all. So we've sprung right back to the numbers in terms of in-person shopping. The numbers are right back to where they were in 2019 across the country. So people love their retail, people love to shop, people love to get out and shop and put their hands on things. And so we've seen a very, very healthy return to retail across the country.
So who is investing in Canadian shopping centers? Is it private, institutions, foreign capital? What's the divvy up there?
Certainly depends on the size of the asset we're talking about, obviously. It depends a little bit on the market as well. But we've seen over the last 5 years a very, very strong demand from private. Private capital has flooded into retail since 2019, 2020, and really runs at about 65 to 70 plus % of all capital going into retail has been private. Now that includes domestic and offshore, but mostly domestic. Now we have seen in 2025 a return of both institutional money as well as some public, some REIT money coming back into the market where they really were absent over the last few years. So that private number that I said was 65, 70% has dropped down to about 50% in 2025, but still dominant, still absolutely dominant in terms of where most of the capital is coming from.
And is the private capital more likely to invest in the smaller markets?
They are more broad range. That's again where I said that you're going to get different types of investors in different types of markets. The institutional money is generally focused on the six primary markets in Canada. We have a very simple, that's why it's easy for me to sit in Toronto and talk about the whole market. There's not that many markets. So there's six primary markets in Canada: Vancouver, Calgary, Edmonton, Ottawa, Toronto, Montreal. It spreads a bit beyond that, but generally that's where the institutions are going to want to focus. And increasingly, that's also where the large retail REITs are focused. They used to be more broadly invested, but now they're trying to stick to those six markets. So yes, outside of those markets, private is absolutely dominant in terms of buying.
Out of the top Canadian markets for investment, would you say like Ontario, like Toronto's the biggest attractor of investment?
So just due to sheer size,
Yeah.
absolutely. We have seen an interesting thing since about 23, since the end of 22, beginning of 23, as retail was picking up. Um, there's been a lack of product available in both the Toronto market and the Montreal market. So just it's not due to interest. It's not due to lack of buyers. It's due to lack of actual assets available. And there's been a big pickup in assets in the prairies. So Alberta, especially, has seen a massive number of trades, outsized compared to their population. They've been really center ice over the last 18, 24 months in terms of retail transactions. So it's been great for them.
Center ice.
Yes,
I love the metaphor. Center ice. You're on the right. We're talking about the right country for
absolutely.
that. And Alberta. So is that economy is driven by natural resources? Is that right?
Yes, oil, natural gas, a little bit of agriculture, but generally oil and natural gas. And so they saw
Gotcha.
with the drop in oil prices, they went through a lull in terms of investment through the late teens from 2017 to 2020. But they're also now that oil's bounced back, natural gas has bounced back. They're a young population. They're a high earning population. They're a high spending population. So it's a great market for retail.
Okay. Another big topic we have to hit is tariffs coming from the U.S. On Canadian imports. Here in the U.S., there's been a lot of speculation on what the impact of those tariffs was going to be to the U.S. consumer. Right now, it hasn't been as negative as some people expected. What's the take on the Canadian consumer?
It's probably the same story that, there was more talk, more prediction about how harsh it was going to be compared to what the reality is. But there's also this sort of sense of foreboding that we're far from out of this. So what's the next shoe to drop? I think that's caused a lot of consumers to step back in terms of their spending. Now, and again, it's still healthy in terms of overall sales are up 20% in retail in Canada since 2019. Now, a lot of that is inflationary, because prices have gone up, so therefore the overall top line number is higher due to inflation. But I think that we're looking at the Christmas season. We looked at the back to school season; they were off as compared to where they were in 2024. Sorry, the back to school was, and we expect Christmas to be off as compared to what it was where it was last year. And I think a lot of that is just due to consumers being concerned about where the future takes us. In terms of actual hard, impacts of tariffs and counter tariffs from the Canadian side as well. So we're seeing, goods coming in from the U.S. to these retailers, and the Canadian government has put counter tariffs on those goods. And so we're seeing prices go up due to that and having a direct impact on consumers. But the last thing that I would say that a big impact is Canadians who used to cross the border more. And so they cross the border for anything from gas to groceries to, just shopping as entertainment. The media has covered it extensively, certainly in Canada, that there's been a big pullback of that cross-border shopping. and they have to spend their money somewhere. So certainly on this side of the border, especially in border towns within reach of the U.S. border, there has been an uptick in spending because dollars are being spent at home rather than abroad.
I saw a news article that Canadian grocers were ramping up opening new stores. What's the trend behind that? Like, why are they doing that right now?
Again, I think that they were the most successful through COVID, and
All right. Okay.
they were the one sector that had no, if anything, sales went up during COVID, and they continued on that path. I would also say though that inflationary pressures over the last 5 years. Um, I joke that everybody under the age of 30, including my kids, would buy everything on Uber Eats through COVID. And then just life went on. And even after life went back to normal, everybody was still buying Uber Eats. Everybody was still getting everything delivered to their door until both their parents, but quite frankly, lots of young people started looking at what the bills were and saying, well, this is somewhat unsustainable to have everything delivered. So I need to cut back. And where's the easiest place to cut back is to go to grocery stores, start buying your food again. Pre-prepared food, certainly. We're not talking about I'm going to go and start cooking for myself, but I will go and I will stop there, and that's a more affordable route. And I think the grocery stores have benefited from that. That there's been this pull away from the Uber Eats and other delivery services, and a return to buying at the grocery store. And so, yes, absolutely, there is a expansion. Every major grocery chain in Canada, and again, we're talking about limited numbers. There's only four major chains generally, but they're all in expansion mode, and they're all looking for new spaces and new formats, smaller formats, more convenient local formats. Is really the big push.
Are new shopping centers being built?
Largely, no, no, and
No.
that's been
Okay.
a trend for. That's not a recent trend. That's really over the last 10 years. We've seen a drawback in new construction. Certainly from an enclosed perspective, that really halted a long time ago. But open air has construction has dwindled over the last 10 years, so it's really helped. Certainly from our perspective, an investment perspective, that there's a limited number of options for tenants. And if you've got an existing center, you've really dominate your market because there's not going to be any new competition coming in. But also, a lot of it is inflationary, the costs of construction. Um, it is prohibitive in many markets to go and build new retail. The tenants just cannot reach the rents that are required to build some of this new retail.
So there was recently Hudson's Bay closed all of its locations. Are any of those partially like grocery locations, or are they more like mall?
They're mostly all mall. It's a massive story. The HBC shutting down. In Canada, we went from having 4, 5 department stores, and one by one, they've all gone down. And HBC was there's smaller national ones, Simons and such, but generally they've all disappeared. And after everyone disappears, you've got all these boxes across the country that have to be backfilled, whether it be Sears boxes, Target boxes. Now HBC boxes have to be backfilled. And these HBC boxes range from 100,000 square feet to generally 250, 300,000 square feet. So large boxes, largely attached to regional malls. I think it's a total of about 15, 16 million square feet across the country in empty boxes. So it's gonna be a big challenge. It's not a small challenge. There are obvious wins all over the place because these assets were $2, $3, $4 rents, long-term leases that were signed decades ago. The average rent for an enclosed mall for an anchor is $15, $16. The average rent in an enclosed mall for all tenants is $30, $35. So you go from $2, $3, $4 up to those kind of rents. That's a big win. However, you have to figure out how you're going to find the tenants to backfill 100, 200, 300,000 square feet. And that's a different story. So
It's a lot of
big
space.
challenge coming up over the next couple of years. And there will be some winners and there'll be some losers out of that.
Is the role of the mall different? Is it more central? Like in the U.S., I'm just comparing. We'll just compare Canada with the rest of the world. Um, do you think the mall is still central to most Canadian consumers, or is it really diminished?
I would say it's surprisingly, you'd be surprised as an American coming north how central malls still are. A few reasons. Number one, as I said, construction has never been at the pace that it was in the States. So, we certainly over the last 20 years, there's been almost no malls built in the country. So these are legacy assets that are situated in great locations, transit, highways, and just generally no new competition. Number one. The second big reason is weather across the country. When I go to these malls, and if you talk to people, if you're in California and you're talking about a lifestyle center and there's a river running through it and a waterfall and everybody's out in the sunshine enjoying themselves, and they say you should build more of these in Canada, and you go, that'd be great for 2-3 months, but it's like, as a comparison, I mean, you can't have these in Minnesota. And so, having a roof over the shopping mall is not just a trend; it's actually a necessity. And so that's why I think these centers are still so central to the markets they're in.
Do they typically have grocery stores and daily needs in them?
It's yes and no. In the major markets, the major regional malls, no. Just cost prohibitive. Rents are too high to have the grocery in there generally, and doesn't really fit with the mix. But across the country, I would probably guesstimate that 2/3 of malls across the country probably do have a grocery component, and that's really the more community mall, the 200 to 300,000 square foot mall would have some sort of grocery component.
So, Matt, we're about to embark on the year 2026. What changes do you expect? What are you going to be doing differently? What are you going to be seeing differently in the coming year?
Sure, tough question. Usually one that I probably got about a 50-50 track record on in terms of answering correctly. But here's my bold predictions. I mean, a few of the things are trends that are going to stay the same that we don't see changing. And one of those is, as we talked about, grocery anchored retail, convenience retail being the darling of the investment market. That'll continue. That is where we see lineups of investors. It's where we see the deepest bidding pool and the most aggressive bidding, and quite frankly, the most institutional, larger buyers in the market. That has no signs of slowing down whatsoever. Um, in terms of something we see growing, I think the demand for retail has been so strong, continues to strengthen the number of buyers. And a lot of that is due to the weakness in other sectors. It's difficult to go buy office. In some respects, it's difficult to buy retail at the pricing that we had, a year or two ago. So retail is where people are spending their money. So I think that there will be a drift, just due to demand, there'll be a drift into other types of retail, into the power center retail, into the more boxy centers, which haven't been in favor. I think we're going to see more demand there. And we've seen a recent pickup in enclosed, and buyers have enclosed of all sizes in all markets. I think that will also continue to increase in terms of demand as people realize they can't all buy grocery anchored retail. But there's good value in some of these other types.
So, I got a fun question for you. So, you must travel to all of the markets through your work, right?
Absolutely, yes.
Outside of your home of Toronto area, what's your favorite market to travel to and why?
I'd probably say, this is where I'm going to get blowback from all my good friends and all the markets across the country. They're all wonderful, obviously, in their own way. I would
Yeah.
say that I love the coasts. And I think I'm not alone when you say Vancouver is a great market, great market to visit, and just a interesting, dynamic real estate market that doesn't act like the rest of the country does. big offshore influence there, and just a different pace. And the other one I'd say, and most people wouldn't have it as much on their bucket list, but I'd say the opposite end of the country, going to Halifax. If anybody has not been to Halifax, just a wonderful,
Mm-mm.
wonderful market, and a wonderful, you know, again, interesting for retail in a different sort of way, but a high growth market, high growth residential. So it's changing rapidly, but just a different sort of pace of life, and a beautiful, beautiful city.
I've not been to Halifax before, but now on your recommendation, I need to figure out a reason to get there.
Yes.
What now? Going back to Vancouver, you've got a lot of Asian influence, right? Tell me how that means doing business there is different.
So, I mean, number one, again, high growth, like a lot of Canadian markets over the last 10, 20 years, high residential growth, and a lot of density being added. And a lot of that, a lot of the investment, both in the retail but in the residential side, has come from Asia. And so there's lots of both private and even institutional capital sources coming from Asia, investing there. And so when you have something on the market in Vancouver, more so than any other market in the country, quite frankly, you have to look at that offshore buyer pool, because they will be aggressive. They will perhaps price things based on a more global scale rather than a local scale, and so it just creates an extra sense of excitement and fervor in the market. Now they are suffering right now from a lot of the residential pullback that we've seen elsewhere in the country as well. Residential construction is slowing, and so they're struggling a little bit with that issue there. But still, just a much more dynamic, as you said, Asian influence market than the rest of the country.
Has residential? I know housing has been a real crisis in Canada. Is that fair to say? Like, what's or not? I don't
Well,
know.
no, it's crisis is, if I was talking about predictions for 2026, crisis would be the word that it would be used when it comes to the housing market. We all see it coming. We may not be quite there yet, but it's in terms of prices are starting to drop. Sales have already dropped.
Oh,
And
okay.
so, but what has definitely been impacted is the furious level of construction, especially in the condo market. Really, it's mostly the condo market. That is where the problems suddenly pre-sales stopped, construction stopped, ability to close on for a lot of these buyers. They've been hampered by debt. They've been hampered by falling prices, or soon to be falling prices in some markets, and so it's really starting to seize up in terms of the residential market, and yeah, the worst may be yet to come.
Is it fair to say that what is in most demand is affordable housing, and what was being built was luxury housing? Is that where the mismatch is?
No, a large part of the, I mean, always you could always have more affordable housing
Right.
everywhere. That's going to be a constant. But rather than luxury, I think what was being built was investor based housing. So building
Oh.
500 square foot units that were largely being bought by investors, individual investors as well as some more sophisticated, and then rented out. So a lot of the condo stock was going to investors, then being rented to. Then it was sort of got ahead of itself in terms of pricing, and suddenly overran itself as debt changed and things like that. And so now those investors are out of the market completely, which
Ah,
means two-thirds of the market in terms of buyers for condos has disappeared.
got it.
Causes a ripple effect through everything. It's a ripple effect
Right.
through rental, ripple effect through single family, ripple effect everywhere, and that's why I say this will continue for a little while. In terms of the fallout from all this, the worst is not over yet.
I see.
As
All
speaking as a
right.
retail expert. about the residential market. So take it
Right.
all with a grain of salt, but
Right. Huge
that's
heap
my
of salt here.
interpretation.
But, well, okay. So, what is ripple effect? What's the ripple effect impact on you then in the retail world?
I would certainly say, as I said, a lot more people are looking at retail because it's an investment
Oh,
option.
right.
But I would
Yeah.
say the other thing is retail for a long time, everybody looks at the retail center and says, that's a retail center. It's also a great covered land play. I can build residential there. What a great urban site. What a great suburban site for density. That is off the table now. There is no density. There is no, because the market has stalled in terms of construction. And so the horizon where you might have seen a retail center that could be a residential site with a 3-year or a 5-year horizon, now we have no idea. It could be a 10, 15-year horizon before that ever gets densified, built up. And so it just goes
Yeah.
back to being pure retail, which is not a bad thing. And it's a simple thing for us. But it just changes the dynamics of how people view it. And maybe in some cases changes the value too, because it is just retail, not some sort of a density play.
Yeah, that is a big change. I remember a few years ago, I forget who I was talking to, saying basically every shopping center in Toronto was a potential target for like a mixed use redevelopment.
Yes,
And
absolutely.
so, wow,
Absolutely. It
that's a big change.
and it again, there will be certain centers that are still that, but the number is very limited as opposed to, as you said, every site. Now it's a few sites.
Gotcha. Well, it's interesting how things are changing. And we probably just scratched the surface, but I think we are out of time. So, Matt, thank you so much for joining me today.
Thank you very much for having me, James.
This has been a great conversation. And for listeners out there, if you like this podcast, do me a favor. Go into the app you're listening to right now and give us a rating. Even better, you can give us a review. Tell us something that you like about the show. And you can subscribe to Where We Buy. We're on the iPhone podcast app. We're on Spotify. And we're on the web at wherewebuy.show. And if you've got a specific question, you can connect with me. If you want to ask me about retail or retail real estate, just find me on LinkedIn. Search for James Cook, JLL. And our theme music is Run in the Night by the Good Lords under Creative Commons license. And that's a wrap.